You start talking about smart contracts or DeFi, and the average civilian has no idea what you're talking about. Most people don't realize the frictionless value transfer that we've created in crypto. All of the ways we've made DeFi or finance more frictionless and more just decentralized. That's just not even on people's radar yet. Which to me, it's just opportunity. It's the internet in 1985 or something.
Hey everyone, welcome to the Edge Podcast. I'm DeFi Dad from Fourth Revolution Capital, and I'm here with my friend and co-host from 4RC Nomadic. Today's show is what we call a quick hit, where we spotlight new and upcoming DeFi projects and teams. Our goal is to help you as DeFi users, investors, and traders to gain some edge on your peers. In this episode, we'll cover Maverick, which is one of the top dexes on zkSync, as well as Ethereum Mainnet. They offer automated directional liquidity provisions. Maverick launched in March 2023 and has since then maintained a top 5 position based on daily trading volume on Ethereum Mainnet, as well as the number 2 position on zkSync era. We're excited to chat with them about their automated LPs, which help to manage concentrated LPs while mitigating impermanent loss. But before we do, just a quick word from our sponsors who make the Edge Podcast possible.
MANTLE, a DAO-governed ecosystem of decentralized and token-governed technologies powered by MANTLE's native token, MNT. Its flagship product, MANTLE Network, is a high-performance Ethereum Layer 2 network built with modular architecture. At MANTLE, we're passionate about supporting builders and created a milestone-based grants program for promising Web3 projects. Calling for ambitious Web3 entrepreneurs. Visit mantle.xyz/grants and apply for it today.
Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KYBERSWAP, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at KYBERSWAP.com. GTRADE by Gains Network is a decentralized leveraged trading platform, allowing users to synthetically trade crypto, forex, stocks, and commodities with up to 1000x leverage. GTRADE is live on both Polygon and Arbitrum, with over 30 billion in all-time trading volume and nearly 50 million in vault liquidity. The platform has consistently been among the top earning protocols, with 7-figure monthly revenue and a net deflationary token. GTRADE has become an on-chain stable for both traders and yield seekers. Check them out at gains.trade or by searching Gains Network on Twitter. The future of Web3 is bright, but crypto startups, DAOs, and on-chain organizations can't scale without tooling to power world-class financial and payment operations. Introducing Utopia, your all-in-one platform to create, execute, and understand your Gnosis-safe transactions. Execute payroll 10x faster through automated payment plans. Coordinate reimbursements and accounts payable through payment requests. Execute multi-sig transactions faster with your global team through signing links. View, label, and categorize all of your safe transactions in one place. Start managing your on-chain payments today by going to utopialabs.com. To get started with gasless payments, message Utopia's co-founder on Twitter at 0xKaito.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains. In USDC. And native access to Instadapp's powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
All right, in just a moment, we'll introduce a core contributor at Maverick, Bob Baxley. As I shared earlier, Maverick caught my attention with how quickly it's grown in trading volume on Ethereum Mainnet, and then how it's become a go-to source for liquidity on the relatively new Ethereum L2 zkSync era. Maverick's website describes itself as the AMM for all market conditions, as well as a place to unlock greater capital control and achieve greater capital efficiency. They do this by automating the concentration of liquidity as the price moves, and we're going to talk all about how this works for us as DeFi users today. So let's kick it off. Bob, welcome to the Edge podcast. How are you doing?
Hey guys, I'm doing great. Thanks for having me. Been pretty busy building these days, excited to be here.
Yeah, you've really had an impressive launch. I mean, I was tracking volumes on DeFi Llama, and I started seeing the name pop up. And to be fair, when you see a name that you don't recognize show up that early, you start to wonder, like, is this a scam? And then as I did more digging, thankfully, I realized, oh no, this is a very legitimate team. And so we're very grateful to have the chance to kind of learn more about the vision of the team and what you're all building for us as DeFi users. So Bob, why don't we just kick off with a little bit about your background? How did you get into crypto in the first place, and what led you to building Maverick?
Sure. Yeah, so I actually have an academic background. I was a faculty member at Georgia Tech doing research in signal processing and machine learning. And in about 2014, I co-founded a cybersecurity startup, so still Web 2, but with big cybersecurity interest. We raised a fair amount of venture capital, and I was the CTO of that until just a couple of years ago. One of my co-founders at the cybersecurity company called Baxley went to kind of all in on crypto in like 2017 and was doing NFT stuff way back then. And he and I got together and started working on Maverick here. So I'm mostly doing the AMM math and the Solidity coding.
I'm curious, Bob, do you have any contacts still, like at Georgia Tech or in academia? I'm wondering, like, how do they perceive DeFi? Like, is it becoming any more accepted or mainstream and, less of a bubble from the outside?
I think once you get, we are so deep into the rabbit hole, like most people don't know what DeFi is. Their knowledge of crypto starts and stops at crypto. Maybe they've bought a little bit on Coinbase or something, but you start talking about smart contracts or DeFi, and the average civilian has no idea what you're talking about. Which to me, it's just opportunity. It's the internet in 1985 or something, where there's just not only is there not much adoption yet, there's just not even much awareness about what's going on. So most people don't realize the frictionless value transfer that we've created in crypto. All of the ways we've made DeFi or finance more frictionless and more just decentralized, that's just not even on people's radar yet.
Yeah, can confirm there, Bob, just looking at the amount of people that watch this show, but hoping that changes. Why don't we just dive into Maverick? Let's say just at a high level first. There's just so many moving parts and pieces to break down here. So why don't we just kind of take like a high level view, and then we'll get into it further kind of piece by piece later.
So yeah, at the highest level, Maverick is a decentralized exchange, a DEX. And the core piece of code in DEXs is an AMM, so an automated market maker. And that's setting prices for the traders when they come and trade in your AMM/DEX. And so there's been, the first AMMs came out several years ago now, and they were simple and elegant. And we've seen more kind of degrees of freedom added to AMMs over the years. Early AMMs is like Uni V2 probably got the most traction with their X, Y equals K model. And then we've seen concentrated AMMs and Maverick, we kind of build on all of that.
Bob, what are some of the highlights since launching Maverick? Like, I want to talk more about how this works, of course, but as I referenced, you all launched back in March, and you've got some pretty impressive numbers to show off in terms of trading volume and just the amount of capital or liquidity that's deposited into Maverick.
There's a few things. One of the places where there's a vacuum in DeFi is DEXs that have the ability to efficiently provide liquidity for liquid staking tokens. So think wrap staked ETH, Rocket ETH, Sweeth. There's all these LSTs, Coinbase ETH, and there's not a very good venue to LP those for liquidity providers. And we're seeing more and more capital flood into these LST tokens, and a way to get, the protocols themselves, these LST protocols want lots of deep liquidity so that those tokens are tradable. And the LST narrative is eventually those LSTs will overtake ETH as kind of the primary unit of account on Ethereum. So I think one of the things we've Maverick, the kind of product market fit we've had is that our AMM, the Maverick AMM, lets LPs move their liquidity with price. So as the LST price moves, the AMM will move your liquidity with that. And we've seen all these LST protocols kind of pile in and incentivize positions, and just LPs who want to have really high capital efficiency join Maverick pools to have that. So we've seen lots of TVL growth, and then we're doing capital efficiency some days of 100, 200%. I think today we're doing $40 million of capital efficiency on $25 million of TVL, which is that's usually the ratio is 10% for lots of DEXs.
Yeah, I might encourage everyone to go to DeFi Llama and check that out. That ratio you're referencing is there, and it is a standout in terms of metrics for Maverick. Bob, when Maverick is automating your liquidity positions, and I want to start to talk through what these different settings and modes look like, what types of market conditions would demand using different modes. But can you dumb down for me, if I'm in an ETH DAI pool and the price of ETH against DAI has moved up, and let's pretend I'm in one of the modes where it's moving my concentrated LP to follow the price as it moves upwards. Are we moving the LP as the price moves, or is it something more periodic? Can you just dumb down, when does the movement of my LP actually happen?
Yeah, let's dig into the mechanics a bit. So the pools all have, we call them ticks. So these are little ranges of price where liquidity can exist. And the liquidity actually exists in something called a bin. So the bin rests in a tick. And if you have a static liquidity position, your bin will never leave the tick that it starts in. Static, it won't move. And so ticks can be, for stable pools, they can be 1 basis point wide. And for volatile pools, 2, 3%, several hundred basis points makes more sense. So that bin, if you stake in one of these movement modes, so if you want to follow ETH up or right in this case, you will put it in a mode right bin, and there will be liquidity in that bin. And then when the price gets just outside of that bin, the bin will move from the tick that it's in to the very next tick over. And as the price kind of gyrates around as it's going up, you as an LP will provide liquidity and collect fee and have high capital efficiency as the price goes up. So you're able to follow it. Now, if you go look at something like Uni V3, where you can also do concentrated liquidity, but you can't make it dynamic, the alternative is you do this sort of thing on Uni V3, and then you go spend gas to move your position manually. In Maverick, that movement is actually happening on swap. So the movements happen once, twice, a couple times a day, depending on the pool and the volatility. And so that extra little bit that the swapper is actually paying the gas there. So it's another 20K of gas or so, a few dollars on ETH, a few cents on ZK. And that's what triggers in the smart contract this movement. And that movement for a single bin moves all the LPs that are in that bin. So it's a scalable mechanism. Whereas back, if you do the UDV3 example, you and me, we both have positions. We both have to pay different gas to move the position. So that's kind of how it works.
So would it be fair to say that you're socializing or sharing the cost of moving LPs across all different users here? Most notably, it sounds like traders are, over time, they're paying just a tiny bit more of gas, and that's what enables us ultimately to move those LPs.
I think that's right. So it's just 2 traders a day. So it's not as if the gas gets aggregated for every trader. So the vast majority of traders don't pay this little bit of extra gas. And one of the reasons Maverick has so much volume is because it's already super gas efficient. So it's way more gas efficient than something like Curve or Balancer, for instance. And that's why we get all this trade flow. So I wouldn't worry about the gas, but that's the detailed mechanism of how it works. And but yeah, you're right. It socializes, it scales out the ability to move this liquidity.
I think one of the, I guess I'd say intimidating factors of Uni V3 for me when I tried to interact with it for the first time was just that idea that I felt like I needed to be active and like almost penalized for a wrong decision. Whereas even though there's like a lot of complexity under the hood to Maverick, I feel like a lot of that is abstracted away. And it is a little bit more passive to me than a more active management style Uni V3 concentrated liquidity system. I guess just on that note, could you maybe walk us through the four main foundational preset modes, you call them modes, that are on Maverick Protocol?
One of them is mode static, and that looks similar to a range AMM like Uni V3. The one difference in mode static, though, is you're not stuck with a uniform range of distribution. You can actually shape your distribution however you want. And that's of interest to protocols. So we've talked to Ohm has like a really interesting mechanism in there, and the AMMs they stake, and they've got some IL concerns, so they can actually shape a distribution to maximize their objectives. And so LUSD is a stablecoin. It also has some kind of funky minting mechanics that require them to create different distributions. So in mode static, you can think of it like existing AMMs where your liquidity is not moving with price, but it's got more than that. You can actually shape your liquidity into different distributions. And then the other three modes are movement modes. So there's mode right and left. Mode right is you are essentially betting that the right asset in the pair will go up. So if it's DAI USD or DAI ETH is the right asset, you're betting bullish ETH. Mode left is bullish the left asset, or bearish the right asset. And then mode both is it actually follows your liquidity position, follows the price in both directions. And that tends to be the most capital efficient. The one downside of mode both is you do lock in IL as you move back and forth. So all the others are just exposed to IL. Mode both is actually exposed to essentially PL, permanent loss. And it probably does not make sense for a volatile pair because the volatility will lock in loss. But it can be a very good option for a stable pair or for an LST pair where you're not expecting giant bits of volatility. So I think for those pairs, to your point, you can be passive and have this strategy where your liquidity is just falling price. I would say for mode right and left, unless you're perma bullish, you do want to monitor those positions. You don't have to move your liquidity as much because if you bet right and it goes right, then you're good. But if you think it's going to correct left, then you should probably get out of the mode right position.
Bob, of the different modes that you mentioned, are any of those more popular among users, or are you able to pinpoint which ones are the best performing so far?
So I think mode both tends to be pretty popular because it keeps you exposed, especially for stable pairs and LST pairs. So I think there's one side of this, which is the users, kind of retail LPs say. What we realized though as we're building this is there's actually a huge appetite from protocols who want to shape their liquidity in kind of a universal way. So there's a mechanism in Maverick to incentivize given liquidity distribution or mode, and we're seeing protocols take advantage of that. So Swell is a good example. We were on a Twitter space with them earlier today, and they've incentivized a mode both position. And that's good for the protocol because mode both is the most capital efficient. As a new token, Sweet, they want a whole bunch of deep liquidity around price. They want a whole bunch of volume. So that makes sense for them. So I think we're seeing as far as popularity goes, from a protocol's perspective, lots of them are picking this mode both because it's hyper capital efficient.
Have you dug into whether that mode both is able to outperform what would be the equivalent of a Uni V2 LP?
It all depends on the market trajectory, the price trajectory. So I guess a way to think about Maverick is, as the punchline says, like we're a universal AMM. You can replicate any other AMM position in Maverick. So if you want to see a stable swap curve thing, you can do that by shaping the distribution. If you want to do Uni V2 or Uni V3, you can do all of those things. So now that you're in Maverick, you have the choice of picking one of these many strategies, and there's no surefire win here, right? Like depending on the price trajectory. So if you bet right, like you want the price, if the price trajectory goes left, you're not going to do well. A static LP position tends to be a bet that the price will go sideways. So if it doesn't go sideways, you're not going to do well. And mode both is a bet that the price will not have giant gyrations, but will have lots of volume and maybe small gyrations. So if that turns out to be true, yes, it will outperform UniV2. If you get giant gyrations, then a kind of a infinite range in UniV2 or Maverick or any other AMM would outperform mode both. So you're really making kind of these judgment calls when you join a pool as an LP.
Bob, do you think there's been a misunderstanding among this early base of DeFi users about LPs being passive? I feel like what you've done with directional LPs is potentially making it more possible for us to be passive. But at the end of the day, when you're in an LP, you're essentially in a trading position. You know, you're, especially with these different modes you described, you're long one asset, you're betting against another asset. Anyways, I kind of just answered my own question there, but
definitely. We think of Maverick as a kind of fundamental money Lego, and you've got to have liquidity pools like this in DeFi to make it all work, right? I think as part of the Lego stack, we're seeing more and more protocols building on top of us. So again, this Twitter space, Tokamak was just announcing they're building their liquidity aggregation mechanism on top of Maverick, among other protocols. And that lets LPs put money into Tokamak, and Tokamak does some of the strategizing for them. So I think we'll see more and more protocols like that. And I think if you really want to be sophisticated as an LP, you're probably hedging your position. This is what the professionals are doing. And that's not easy to do natively. Like, you have to know a lot to be able to do that. And I think we'll see more and more protocols kind of help with that. So this becomes passive, and you can turn all these knobs that are available to sophisticated users by using stacks of protocols, stacks of DeFi money Legos together. And Maverick, we're really just providing all the degrees of freedom so that all those higher level money Legos can turn the knobs. And as I said, the big one we're seeing is protocols coming in, because new protocols desperately need liquidity, and we're giving them that.
Bob, are you familiar with GammaSwap? Would you ever consider, would you as a team, I guess, consider that LPs in Maverick could then stake that LP in something like a GammaSwap to hedge in the future?
Sure. Yeah. And it's all permissionless. So anybody can do any of these things. We definitely encourage that, though.
Meet Stater Labs, a non-custodial multi-chain liquid staking platform. With over 40,000 users across 6 chains, Stater is just about to launch ETHX, a decentralized liquid staking token on Ethereum. Backed by some of the biggest names in crypto, their multiple audits with top security firms, bug bounties, and real-time monitoring are a testimony to their emphasis on security and safety. With a unique multi-pool architecture and tokenomics, ETHX empowers stakers everywhere to run a node with as little as 4 ETH and earn 35% more than solo stakers. Sign up for their ETHX Alpha today and be the first to know about $1 million in staker rewards. Ethereum is fully decentralized, and Liquidity is a shining example of decentralization. Liquidity is a non-upgradable protocol where users can deposit their ETH and take out a loan interest-free. Users get their loans in LUSD, an unstoppable Ethereum native stablecoin that is solely backed by Ether. You can use Liquidity to buy real-world assets or to earn yield across 20-plus places in DeFi. More risk-tolerant users can also use the protocol to lever up on their ETH. With over 750 million worth of ETH locked into Liquidity's unstoppable contracts, get access to real DeFi. DeFi that's immutable, capital efficient, and fully decentralized. Learn more at liquidity.org.
Yeah, I just had like a few kind of epiphanies just like listening to your previous response there, Bob. Like, I think more things just kind of clicking for me as well. Just that permissionless nature, this like foundational liquidity money Lego, and like highly flexible and highly composable. I'm really interested to see what some smart individuals decide to integrate or build on top of with this. And that's kind of like I guess my question too is, so somebody can really come to this and build a new pool just exactly how they desire. Like they can set their own fee tier or bin width, and there's nothing really limiting within the protocol for people doing that. It is fully permissionless. Is that correct?
That's right. one of the, epiphany is a good word. One of the epiphanies for us actually was that I think early dexes, so Curve and Uniswap, and they all actually tended to discourage kind of diversity of pools. So the tendency is there's one fee. So Uniswap has like 4 fee options, and that's it. And I think they did that early on because there weren't trade aggregators. 1inch didn't exist and Paraswap didn't exist. And so having liquidity split across a bunch of pools created fragmentation of liquidity in bad ways. But now that DeFi is more integrated and you have these trade aggregators, it's actually not a problem at all to have multiple pools that have the same pair of assets, but different widths, different fees. So one of the things that is in the Maverick smart contract is you can pick any fee you want, literally any fee you want. And that's really the degree of freedom that LPs have, is picking this fee. So in a euphoric market, a high fee makes sense because trades are coming no matter what, no matter the fee. If you're trying to grind it out in a quiet market, you're going to need a lower fee to get some trade flow. And if it's a quiet market, you're maybe less exposed to directional risk. So I think one of the things we did is we let the user pick whatever fee they want because they, maybe they do want to hop from pool to pool as the environment changes.
One other thing I saw just kind of like looking over the site was boosted pools. Could you give listeners just a breakdown on what are boosted pools? How do they operate within Maverick?
So we built that from feedback with protocol partners kind of before we launched the AMM. We had a few protocols come to us and say, wow, this distribution thing you're doing is super cool in this movement mode. Me as a protocol, another protocol, I would love to incentivize LPs to just come into that specific distribution or just to come into a mode both position in my pool, my protocol's pool. And so the pain point for them is up until then, protocols, when they wanted to incentivize liquidity, they had to incentivize an entire pool. So if you think about like a Uni V2 pool, if protocol X incentivizes a Uni V2 pool, so they give the LPs some incentive. So they give them, Lido puts like $2 million a month into incentives. They're incentivizing that entire price curve. So it's got 2 assets in it, protocol X and say USDC. And they're paying LPs to bring USDC to a pool, and maybe they only want protocol X or vice versa, token X. So it's a very, very blunt instrument. The old mechanism was a very blunt instrument to incentivize liquidity. And so what we built is a way to just take a given distribution inside of one of our pools, mint that to this boosted position. That becomes an LP that's represented with a ERC20 LP token. And then you can stake that LP token into a rewards contract. So all this happens under the hood in the app. And at the end of the day, now the protocol is happy because they've been able to incentivize exactly the distribution of liquidity they want to incentivize. And the LP is happy because they're getting paid by the protocol. And the protocol can be more generous with the rewards because it's a much more targeted LP position they're incentivizing.
Awesome. I encourage any listeners to go check out the docs for Maverick. There's some really interesting liquidity strategies. I'd call them probably a bit more advanced, but I think once you kind of read through those, it kind of, or at least it opened my mind up to some of the other functions that you can serve. You can dollar cost average. You can almost do like a limit order style setup. So I think that just kind of further kind of shows some of the flexibility and versatility of the protocol. But so I actually caught a bit of your Twitter spaces this morning, and you've kind of already addressed this a bit, but I do want to linger on this a bit because I do think like LSTfi is huge. And I would just kind of like love you to kind of like walk through like what is your perspective on this kind of like new emergent vertical, and how big of an opportunity do you think this represents to Maverick and I guess the industry as a whole?
I mean, obviously it's huge. I think the idea that, as I was saying on the Twitter space, we've gone from proof of work where you have to buy some expensive hardware to reap the benefits of the utility that Ethereum provides, to proof of stake where you've got to run a validator, which is technically complex, to reap the benefits that Ethereum provides. And now we've got these liquid staking tokens, which you're basically fractional owner and validator income. And that shows up as yield on this token. So for those of you who aren't familiar, you take ETH, for instance, you stake it in one of these LST protocols. So Lido or Swell or Rocket or Coinbase, Frax, and you get this LST, a different token, but that token is going to appreciate with respect to ETH, and the appreciation is going to be proportional to however much the validator rewards are while you hold that token. So I think it's really a no-brainer for anyone with ETH who wants to be long ETH to go stake it and get this extra bit of yield. So I think we'll see just LSTs completely displace ETH. And then for Maverick, it's a big opportunity because we've got the only AMM that can efficiently LP a pair that moves steadily in price over time. So if you want to LP ETH in one of these LSTs, that's tricky unless you're using a Maverick pool.
Since you all had launched on zkSync era, Maverick is I believe, number 2 AMM in terms of trading volume, just behind SyncSwap. And it's really become a go-to liquidity source. I mean, me being an early user transacting there, I can speak firsthand to the fact that Maverick is one of the few places I'm turning to trade on zkSync era. So just curious, like what led to that decision to deploy on zkSync versus another L2?
Well, the zkSync story is really exciting. It's the first zk rollup that we're seeing in DeFi. And so we're super excited about all kinds of things that they're doing, from how they store state to account abstraction, and we wanted to get there early. We also saw that there's some forks there, but there was no big DEX there yet, so we thought we'd go there, and we have a great relationship with the zkSync team. And it's gone great. So I think we've got by far the most capital efficiency there. I'm actually double checking the SyncSwap volume. We may have passed them in volume. It's going real well in zkSync. I think we've got 70,000 unique users that have minted position NFTs. So the zkSync ecosystem is definitely super vibrant. The other interesting thing about zkSync is the pools, because it's early days and there's lots of people trying to go from one token to another. The pools actually have higher fee tiers than you'd see on, say, L1 with just as much volume. So that can be pretty attractive to LPs.
Bob, in light of all the impressive numbers Mavericks put forth in terms of trading volume and capital efficiency, what's next? Like, how do you continue to grow trading volume and liquidity and capital efficiency? Is there any sort of secret sauce you can share to what's ahead?
So I think it's super early days. So the boosted positions is only a couple weeks old. We're seeing more and more liquidity pile in there as protocols realize they can use this tool to incentivize it. And so I think that'll continue to grow. I think we'll see more. We're helping a whole bunch of protocols integrate with us. So Tokamak is an example, and there's many others in the pipeline. And the last bit is we do have a voting escrow sort of mechanism on the roadmap. So I think Curve has been super successful with that. The Solidly and the 3.3 forks like Velodrome, they've got a twist on a voting escrow sort of mechanism. And I think that's the last piece that gives protocols yet another mechanism to kind of vote their liquidity and vote their boosted positions as compared to other protocols' boosted positions. So I think we'll see this LST war play out. It was the stablecoin wars. Now we'll see the LST wars play out on Maverick.
I want to give credit to the fact that you are actually one of the few projects that has been able to, I think, bring forth some new ideas to AMMs. AMMs is, it's one of the biggest sectors in DeFi, and it felt like everything that could be innovated there had already shown up, but it's exciting to see that you're actually bringing forth new ideas to how this can work. And I think at the end of the day, these different modes, they allow us to express whatever position we want. It's, as you pointed out, it's permissionless. It's very flexible depending on the fee tier and the way you want to actually automate that position. It's very ideal for something like an LST pair. Bob, thanks so much for joining us. This was a real pleasure to get to pick your brain, and I'm just so impressed by all that you're building. And this is what bear markets are for. They're for the hardcore DeFi builders to be able to build in a little bit quieter of market conditions. I think what's wild is based on, again, the growth of your trading volume and the pickup we've seen in DeFi lately, I'm not sure if it's going to be quiet for much longer. So, Bob, in case folks do want to get involved in Maverick or follow your work, what would you recommend?
So mav.xyz, you can get to the docs and the app and the kind of front page there. I'm on Twitter, active in our Discord. And so you can see anybody on those venues.
And also a reminder to folks, you can follow Maverick Protocol. That's on Twitter, and that's the official account there for Maverick. And that way you can keep up to date on any sort of new boosted positions or any future upgrades to the protocol. But otherwise, thanks so much, Bob. And we'll talk soon here.
Yeah, it's been great. Thanks, guys.
Thanks, Bob. Pleasure.
Thanks everyone for tuning in. If you're a talented builder like Bob, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.